So good morning students. So in this video we'll explain the amendments applicable for CA Inter exam, law exam May 23. Okay, so CA Inter law paper May 23 examination amendments. So we'll discuss one by one. So first amendment is related to small company, a minor amendment. They have changed only the paid up share capital and turnover limits. So before amendment, what is the paid up share capital, and after amendment, what is this paid up share capital? So first amendment is relating to small company. So small company, before amendment, after amendment, before amendment, after amendment. Okay, so before amendment, small company has maximum paid up share capital. Maximum paid up share capital 2 crores. Now it is made as 4 crores. So and maximum turnover 20 crores. Now it is made as 40 crores. Okay. So before amendment, paid up share capital is 2 crores, turnover is 20 crores. Now after amendment, they made 4 crores and 40 crores. So this amending the definition of small company is a continuous activity, because as the economy grows, what you felt as small company 1 year back may not be small company today, because the small or big is relative term, not the absolute term. I cannot say 1 crore company is a small company or 10 crores company is a small company. No, depends on the economy. What is big company 1 year back may be small company today. So 1 year back, if a business is doing 1 crore, it is a big company. Sorry, so 20 years back, if a company is doing 1 crore turnover, it is a big company. Now the same after 20 years, if a company is doing 1 crore turnover per annum, it's a normal thing. So therefore, same 1 crore turnover, what is pursued, same 1 crore turnover pursued as big 20 years back, may be pursued as small today. Okay, so therefore the word small or big is a relative term, not absolute term. Since relative term means it is linked to the economic size of the country. So as the economy grows, the size of the small company also keeps on increasing. Even though the absolute terms turnover is same or increasing, but it is treated as a small company only. So therefore, continuous trend, amending the definition of small company is a continuous trend. You have to blindly accept it. Okay, so this attempt there is an amendment. Sir, will there be an amendment in the next attempt also for small companies after 6 months? Yes, maybe. So maybe after 1 year also, once again, one more amendment will be there is on a small company. Yes, this is the dynamic definition. The small company definition is a dynamic definition. It keeps amending over a period of time. Okay, right. Next. So earlier paid up share capital is 2 crores, turnover is 20 crores. Now paid up share capital is 4 crores and turnover is 40 crores, 4 and 40. Okay. Before amendment, 2 crores paid up share capital, turnover 20 crores. After amendment, paid up share capital 4 crores and turnover 40 crores. Next, so this memorandum of association, rectification of name, though the icaistudymaterial has given in the latest RTP that there is an amendment in section 16, rectification of name, that is not a new amendment, it is a carry forward amendment from November 22. That is the reason we have not given here. For your reference and for your comfort, we are adding the November 22 attempt amendments also below the list. Okay, so after this May 23 attempt amendments, you have to read the November 22 attempts. I'm not going to discuss that November 22 attempts, that is already discussed in the previous amendments class. So just for the sake of your comfort and revision, we are once again revising it. Okay, so this rectification of name is applicable from November 22. It's not a new amendment. Okay, next, private placement, allotment of securities and private placement. So what we are discussing is that in case of a private placement, so the board of directors can select any persons whom they fit as whom they fit to the company. So they will allot the shares, of course, after taking the shareholders' consent by way of special resolution. But here what they are saying is that taking shareholders' approval is not sufficient. If you are collecting money and the issue of securities is linked to the Foreign Exchange Management Act, you have to take the consent approval also. Okay, so no offer or invitation, that is private placement. Rule 4 deals with a private placement. Offer under Rule 4 means private placement offer shall be made to a body corporate incorporated in or national of a country which shares a land border with India, like Pakistan, China. So which has a not US and Canada. China and India, they have a land border sharing with India. So along with the land, their country is there. So therefore, land border, sharing a land border with India. So if you are collecting money, if you are issuing securities to the national of a person whose country has a land border with India, you have to take the approval from the government approval under the Foreign Exchange Management Act. Okay, so no other stringent amendment. So private company, no doubt I have a freedom to offer the securities to any person with the shareholders approval. So therefore, if the shareholders agree, government also does not have an objection. But for the government, just inform as it's a matter of national security. It's not matter of economic thing. It's a matter of national security. The countries which are sharing a land border with India. So keeping in mind the national security interest, what the government said is that government is not outrightly preventing, don't raise money from China, don't raise money from Pakistan. It's all your business sense. It's all your, if it makes business logic, you can do it. But government has a statutory obligation or constitutional obligation to protect the security of the country. So keeping in mind the national security of the country, what the government says, boss, you can issue securities to any person, take the board approval, take the shareholders approval, but if at all those people are belongs to the country having a land border with India, just inform us. If you don't have any objection, yes, we'll approve it. It's not that all Chinese investment are bad or all Pakistan investments are bad. So it may depends on the situation. Therefore you just inform to the central government. If the central government does not have any objection, you can go ahead. Remember, there is no prohibition that you should not raise money from China or Pakistan or land border shared countries. You just inform to the government. If the government does not have any objection, they will give approval. Okay. Right. So private placement, I am offering securities to a person who is national of the country, who is a national of a country which has a land borders with India. So in that case, I have to take the approval of the government. Okay. Under the Foreign Exchange Management Act. Next, all these amendments, membership and register, declaration and payment of dividend, this register of charges, all these amendments are covered in the November 22 attempt only. That is the reason, for the sake of your comfort and revision, we have repeated it. Okay, so now I'll discuss exclusively what is covered in the May 23 attempt. Okay, look at the second point. Right, the form number CHG, these are the charges related format. CHG1 for creation of charge, CHG4 for satisfaction of charge, CHG8 and 9 other forms. So they can be signed by insolvency resolution professional also. Okay, right, not only the company secretary or chartered accountant or the director of the company. So the power is given to these persons also. Insolvency resolution professional, the power is given to these persons also to sign on the related forms. Form number CHG 1, 4 and 8. So apart from company directors, earlier it is the director of the company or chartered accountant, cost accountant or company secretary can sign the documents. Now the power is given to the insolvency resolution professional also. Okay, they can file the documents. Next, acceptance of deposits. Before amendment, after amendment, there is no much change. Before amendment, what we used to do is that before amendment, we used to take the auditor's certificate. What is that auditor's certificate? Company has not defaulted in payment of deposits, or company has defaulted, but the default is made good in the sense rectified, and after rectification 5 years has been lapsed. Okay, auditor has to give either of the certificates. Either auditor should say no default, or auditor should say no boss, unfortunately company has committed a default 8 years back, but they have rectified the default. After rectification also 5 years has been lapsed. So that is the auditor's certificate. Now also we are taking the certificate, but in the circular we are giving a declaration. So auditor has to certify, but in the circular a declaration to that effect shall be submitted by the auditor in form number DPT3. So rather than just giving a certificate to the company, now in the form number DPT3 itself auditor has to sign. So DPT3 is the form to be submitted by the company to the ROC. DPT3 form is the form to be submitted by the company to the ROC. Now, rather than taking a separate certificate, or apart from taking a separate certificate, let the auditor also should sign on the DPT3 declaration. Declaration to that effect shall be submitted by the auditor. In form number DPT3 itself, auditor has to sign, apart from giving a separate certificate. Okay, right. So these accounts of companies relating to amendments, November 22 amendments only. This eligible CSR activities, you don't need to memorize this. There is a big list of acceptable corporate social responsibility activities given in Schedule 7, and apart from that, government is issuing circulars for the over a period of time. So therefore, you don't need to memorize all the names which are eligible for CSR funding. Just go through it once. Okay, if at all you get an MCQ or small 1 or 2 marks question, you can recollect it. Okay, no need to memorize it. So these are the persons. Har Ghar Tirang. So during that Jan 26 or August 15th, Narendra Modi has said every house should have a tricolor flag. So therefore that's what the point. Har Ghar Tirang. Okay, Azadi Ka Amrit Mahotsav. So these are the promotional campaigns by the government. So which encourages the patriotism. Okay, love and affection towards the country. So if you are spending money for those activities, they are eligible for CSR activities. Activities relating to this campaign are eligible for CSR activities as per Schedule 7. Okay, right. Next, so this is also a newly inserted provision, CSR reporting. Every company which has floated a corporate social responsibility committee, or which is required to spend for corporate social responsibility, they have to register. Okay. Every company covered under section 135 subsection 1, that is satisfying the net worth criteria, turnover criteria or net profit criteria, shall furnish a report to the registrar for the preceding financial year 2021 and onwards. Remember, and onwards, not only for the financial year 2021. Therefore, subsequently also depends upon normal company AOC 4. So company which is filing financial statements in XBRL form, AOC for XBRL, NBFCs, AOC, NBFCs, depends on the type of company. End of the day, basic document is AOC document only. So in the AOC document, so in the AOC as an addendum to AOC document, you have to file a separate form number CSR2 attachment. Okay, form number CSR2 to be filed as an attachment with form number AOC4. Form number CSR2 shall be attached as a amendment to form number AOC4. Okay, right. So this is when every for the preceding financial year, for every preceding financial year. But for the financial year 2021, since it has been included for the first time, they are asking on or before 31st March 22. Only for this year. Only for this year you need to file on or before 31st March 22. Anyway, that date is finished now. Therefore, for you it is not relevant. For you, what is relevant is the next question. Look at the CSR2 when we have to file. So as an addendum to AOC4, that means there is no separate due date for CSR2. You need to remember, there is no separate due date for CSR2. So whatever is the due date for accounts of companies filing in the accounts of companies chapter, same form, same time limits. For that you are filing it as an attachment. So this is the old provision. Before amendment means this provision only. Okay, so they are making it as, so therefore there is no separate time limit for CSR2. We are filing it as an attachment or addendum to AOC4. Therefore same time limits as applicable to AOC4, that is 60 days from the end of the financial year, the same time limits will be applicable. Okay, right. Next, accounting software. Earlier companies used to have this audit trail software. Okay, every company should have an audit trail software. Okay, audit trail software and creating an edit log. What the audit trail software will do, they will keep track of editings. How many times a particular journal entry has been edited. Whatever may be the software used by the company. So every software, be it a basic software like Tally, or be it an extensive comprehensive software like SAP, Oracle, etc. Whatever the software used by the company, small or big, every accounting software should have a separate feature called as audit trail feature. What the audit trail feature will do? So audit trail feature will keep track of how many times a journal entry has been amended. So normally when you write a journal entry, that is fixed. What is the necessity of amending? Unless there is a mistake. So how many times you rectify the mistake? If I am changing one journal entry 100 times, means I am manipulating the accounts to just get my desired results, to just get my desired closing stock, or to get my desired gross profit or net profit. Okay, I am keep on changing the inventory details. I keep on changing the credit purchase details like this. Therefore, a particular journal entry, if it is amended more times, then auditor will get cautious. As this is where the company is playing. This entry company has amended 25 times. That means company is playing with this entry. So it's not that whatever the transaction happened, we'll write the entry. No sir, by mistake you wrote a wrong amount. Okay, you rectified. How many times you'll rectify? 1 or 2 times you have. It's not the 25 times you committed a mistake and you rectify and the 26th attempt is final. No, none of the 26 is final. You are crooking your books of accounts. Okay. So therefore, every software, irrespective of its complexity, they should have an audit trail feature, and the purpose of the audit trail feature is to keep a log or record of what are the amendments they have made. Okay, before amendment, this audit trail feature is mandatory from 1st April 22. After amendment, this audit trail feature is mandatory from 1st April 23. Okay, so before amendment, the audit trail feature is mandatory from 1st April 22. After amendment, the audit trail feature is mandatory from 1st April 23. Okay, right. Next, so the books of accounts, you should keep a backup of all the books of accounts. Earlier they said shall remain accessible in India. That's it. Now they have added the word at all times. That means whenever suddenly the government authorities go for investigation, government authorities go for inspection, you should be able to produce the backup of your accounting records, not just accessible in India, at all times. Anytime sudden surprises by a government authority. Sir, periodically, earlier the act said periodically, maybe weekly once or a monthly once you can keep the backup. Now the act said periodically, not sufficient. Periodically not sufficient, you can say daily basis. Earlier, the backup to be kept on a daily basis and at all times it should be accessible. When any time government authority goes, it should be accessible in India. Maintain, okay, daily basis, maintain the backup daily basis, and it should be accessible in India at all times. Okay, so when the service provider is located outside India, the company has to inform the address of the service provider to the ROC. Okay, service provider who is maintaining our data, okay, who is maintaining our data in cloud. Okay, if their service provider is located at who is the service provider? The one who is maintaining the books of accounts of the company as an outsourcing agency. Normally, maintenance of accounts is pursued as a non-revenue generating activity or non-core activity. That is the reason companies will give outsourcing. The maintenance of accounts is an outsourcing activity. So therefore, if at all you have given the account maintenance as an outsourcing activity, then the service provider is located outside India. You have to inform the ROC on annual basis. What is the address of that service provider? Okay. So all these amendments are important. Accounts of companies amendments. Next, unspent corporate social responsibility. Normally, what the earlier provision says is that if you fail to meet the criteria, section 135 subsection 1 contains 3 criteria: net worth, turnover, net profit. If you does not meet that criteria for 3 continuous years, from 4th year onwards, you need not maintain the CSR. That is the earlier provision. Okay, I have entered the CSR, but continuously 3 years I am out of the CSR limit. Therefore, from 4th year onwards, I can withdraw the CSR committee. That is the earlier provision. Now, what the provision says is that even though your turnover net worth criteria is not satisfied, but there is some unspent amount in your CSR account. Till that unspent amount is spent, you need to continue with the committee. Okay, right. Shall constitute as a comment unspent amount. Every company having an unspent amount, shall continue. It's not that they have to constitute. Strictly speaking, they have already constituted, but since the criteria has not met for the 3 years continuously, they want to withdraw it, but the access don't withdraw. You have constituted a committee, right? Let the committee continue. Even though you are below the limits, but you have the money. You have the money, unspent money. Okay, so therefore, till you spend that unspent money, you have to continue with the committee. Okay, right. Next, so earlier this is the provision government can act, the CSR activities can be implemented through company incorporated under section 8 or so this is implementing agency. Okay, section 8 company, trust or society is an implementing agency. Okay, so section 8 company, trust or society is an implementing agency. Now the question is, who established that implementing agency? It's established by. So who established that implementing agency? Is it the company alone, or company along with another company, or is it established by central government or state government, or is it established under an act of parliament, or is it established by any other entity having 3 years track record? Now this they have changed. Not every section 8 company or trust, right? That means if the company establishes a section 8 company, if the company which is required to spend CSR established or incorporated an implementing agency by way of section 8 company, so that implementing agency should definitely get registered under these 3 sections of the Income Tax Act. Earlier, that registration is only under section 80G and 12A. Now they said the registration is mandatory under section 80G, 12A and section 10 subsection 23. Okay, so this is the point. Central government or state government, this is same. Established by an act of parliament, this is same. Now also the same thing. Earlier they said only 12A 80G. Now they said 12A 80G and section 10 subsection 23C. Okay, right. So the only thing is that earlier the implementing agency is established by our company alone, or the implementing agency is established by our company along with other company, or the implementing agency is established by central government or state government. Now the same implementing agency, they should get registered under the Income Tax Act, either under section 10 subsection 23 or section 12A 80G. Okay, so 1023C they have added additionally. 1023C, if you closely monitor the amendments, they have added wherever section 12A and 80G is there, they have added one more point called as section 1023SC. Apart from that, there is no much amendments here. Next, impact assessment. Okay, a company can spend money for impact assessment, for evaluating whether impact assessment, what is the impact of the project. The company has taken a project, it should show quantitative impact, outcome based, not money spent. It is not sufficient if you say, sir, I spent 100 crores. What the government asks is what you achieved by spending 100 crores. Therefore, the outcome is important. That is impact assessment. So you need to bring some independent agency. They will evaluate your spending. Okay, where you spend 100 crores. What is the use of it by spending the 100 crores? How did you make any impact on the society? They will assess it. And for that assessing fees, you have to pay earlier, not exceeding 5% of the total CSR expenditure or 50 lakhs, whichever is less. Now they said 22% or 50 lakhs, whichever is higher. That 5% they made it as a 2%, and 50 lakhs they kept as it is, and whichever is less they made as whichever is higher. So the amount we need to pay to the agency, independent agency who assessed, who verified the impact of our CSR project. So what is this amount? This is the consultancy charges we have to pay for a association. Then consultancy organization, what that consultancy organization is doing, they are assessing the impact of our CSR project. Okay, that is what we need to make. So these are all about that's all about the amendments for May 23 exam. So remaining amendments are November 22 only. You keep record. So very few amendments are there for May 23. Okay, all the best.